Hello guys, you're welcome to the verbstrade.com. Today we want to discuss with you not just living strategies for you to start trading with and all that. Today we want to discuss extensively one major thing that we've been uh, putting into consideration is how a trader can actually trade like the bank, even when they don't have the kind of equities and funds that the banks and other institutional firms are trading with. Okay, now you can imagine yourself like the hedge fund managers, pension fund managers, insurance fund managers, and central banks and all that. The way these institutional traders trade in the market is awesome. Okay, they are the market makers. You and I, we are just traders that speculate price movement, but they are the market makers. So you see, our speculations does not really move the price because our volumes that we are trading with is nothing compared to what the institutional traders are putting into the market. So even when they tell you that volumes are important and all that, you should check these for real. Okay, when the banks are stepping in to place trades in the market, of course they don't want to stay long for 1 hour. They don't want to trade for 30 minutes. Okay, they don't want to hold the trade for the whole week, right? Because majority of the funds that they're actually using, okay, these are investors funds, okay, and they pull these funds together to come into the market. Of course they want to make profit. You understand, they want to make profit, and because they want to make profit, they would look at for the best entry opportunity. So this is we talking about quality out of quantity. So what we're talking about right now is quality out of quantity. Every trader should understand how the market works, and that would make you to look at the trend of the market, okay, to know what the market is doing. It's either the market is, moving in any of the three market phases. Of course, we have three market phases. All right, we have the uptrend market, we have the downtrend market, then we also have the what consolidating, or you can call it the what ranging market structure. These three market structures makes a perfect entry. Okay, but you must look out for quality, not quantity. Now, another factor that you should consider why staying or coming into the market is what how much do you plan on earning? How many percent of your capital do you plan to earn for the day? Now, the institutional traders would come into the market and then they would decide to make 1% or 2%, of what they're putting in for that time, and they're off the market. So they pump the price, right? They make the price push up. Okay, but now you as a trader, you want to make 200% of your account size in one open position. Okay, so that is why the brokers are always enjoying from us, because we are very greedy. We are not smart traders. Of course, yes, we're not smart traders. If you are a smart trader, then you should be going back to our best trading strategy for the volatility 100 index, so you know how to trade. You look out for what quality. So the strategy on the volatility 100 index is what giving you what quality out of a quantity. We have market movement from the bottom to the top, from the top to the bottom, and all that and all that. Not everybody should trade the same way, right? You go to school, do you think in the same direction? Of course, if everybody is taking the same towards the same direction, then there's going to be a kind of problem. All right, yeah, there's going to be kind of problem. So what I'm trying to say right now is identifying price movement on your chart, and then you should be able to know where to come in on the trade. And why knowing when to come in, you should as well know when to go out of that trade, when to come out of the trade, right? Yes, so your entry is let's say if you are selling from this zone, okay, let's look at that quickly. Okay, let's say you are placing a trade, okay, from that level, right? You are selling from that level. Then what next? You rode the price all the way from that place to this downside. Okay, now that is for a trader who wants to stay in the market for that long. All right, now if I want to come into this trade, okay, I might look at coming into this trade and just taking profit from this level to this level, right? And I'm done. Okay, now you are going to be riding the price from this level to this level. Why I am riding from this level just to this level? Okay, so you see, I might decide to take just the two candles, right? Okay, if this is 1 hour, okay, and I decide to spend just 2 hours in the market, it's a very good strategy. All right, while you are wanting to hold the price from here, let's say you place this trade since morning and you want to hold the price until the price get to this place. Well, it's your own cup of tea. All right, whatever quantity of water you put in, okay, you have to sip it all. Of course, wastage is not a good thing, because so many persons actually want that opportunity. So don't be a friend of wasting things. All right, now what I'm saying in essence is, with the strategy on the volatility 100 index, now we are trying to identify, okay, quality out of quantity. Now we have this whole move as quantity, right? Now it's gonna be quantity because you, as a trader, you may not have enough equity on your account, right? And then you decide to place the trade from that level with what, a 0.20. Okay, and then you hold from there to this level. Now if you are holding your trade from this level to this level just to make, let's say, $50, right? And then I hold my trade from this level with a very good lot size, because I know that the price is coming down the same way you know that the price is also coming down, and I decide to come out of my trade around here. That means that I'm going to be making a very good profit, and I'm also not taking too much risk. You know why? Because I should be out of the market while you're still in the market. What if price pushes down to this direction and then something like this occurs? What happens? What happens? You will discover that while I have been able to save, okay, from the market, you are running at loss because you fail to identify quality out of quantity. You wanted quantity. Majority of traders nowadays all go for what? Quantity. Okay, but we don't go for quantity. So that is why at the Febs Trade Academy we teach you how to go for quality and not quantity. Whatever strategy you get to come across, either on YouTube or maybe from a personal mentor, right? You need to understand the power of it, because the power of that strategy is you identifying quality out of quantity. Okay, now the volatility 100 index, okay, we sat down to get the strategy that would help us identify quality out of quantity. Now how do you do this? Using the stochastic oscillator with the formation being explained on that previous video, right? Just go back and check the best trading strategy for the volatility 100 index. It's the previous video before, the prior before this one, right? Yeah, so just go there and observe. You make use of the stoke, and then you want to see certain moves, right? So let's see, for you to do that, you have to use the 5 minutes time frame. Okay, yes, 5 minutes time frame is the most preferred time frame for that, right? Yeah, that's the most preferred time frame for the strategy. Okay, now the strategy states that you buy when the word stochastic oscillator crosses below the level 20. The level 20, just like what we have here, all right, you see the stochastic oscillator is currently below the level 20. All right, now what are we expecting here? We want to see the blue line, which is a fast moving average, crossing the red line, which is a signal line. The moment we notice a cross, all right, a cross is going to come very sharp and clear, all right, when the candle that is currently going to give you that cross closes, okay, closes either bullish, right, semi bullish, and so on and so forth, right? Now, if you look at what this indicator is doing right now, you see that the current 5 minutes candle, if it closes bullish, all right, if it closes bullish, then we're going to be having a crossing on the stochastic oscillator. Now, when that crossing comes in, that is you having what quality in the market, okay, quality in the market. But before that comes in, you should be able to decide how much you want to put in on that trade and how much that is going to give to you. Then don't forget that you need to determine how long you want to spend. The strategy is all about you going in when the crossing has been confirmed, okay, when the crossing has been confirmed, and then you might decide to hold for the expiration of the current candle that you went in on, right? That means you have to spend just 5 minutes in the market. Okay, spending 5 minutes in the market with good lot size, that is what quality. Okay, and then you discover that you make about 50, depends on the lot size and how much you have, in your account. Okay, when you make this profit, you take it and then you come out of the market. That's quality. Okay, now someone who places trade with the lowest lot size around here and wants to drive all the way up, probably the person wants to achieve $100, right? Yeah, but now you will be placing the trade with a very good lot size, okay, and in just 5 minutes you've made $100 and you're out of the market. So, can you see the difference now? Everybody must not trade the same, right? But everybody should not be losing money in the market, because when you lose money in the market, the brokers are always smiling because the money goes to them, right? Yeah. Quality out of quantity. We have too many price movement, right? Too many directional price movement, up, down, up, down. You see market giving you swing highs and swing lows, right? You see market making all these moves, and then you don't really understand what to do in the market with something like this, all right? You don't really know what to do in the market. You don't really know when to come in, okay? You want to come in, maybe, let's say, when price breaks below that level, okay? Let's say price breaks below that level. You understand the principles of breakouts. That is what quality. But now you should not just go in because there is a breakout alone. There should be other factors that should confirm your entry. All right. Now we're looking at this. We're looking at price. Okay, coming to the low part. All right. We know that this is not going to cross. It's not going to cross. So we're looking at price. Maybe closing, and then we want to see, first of all, when you see the market is on the downtrend like this, let me explain extensively here now. Okay, all you wait for is a crossing to come. Okay, while waiting for the cross, you need to see a strong bullish candle. All right, either an engulfing candle that is going to engulf the prior candle. Okay, or you want to see a pin bar, you want to see a tweezer bottom, you want to see a whole lot of bullish reversal candlestick formation at that level. Now, if that candlestick formation comes in and then the stochastic oscillator crosses, right, then you know that you've gotten an entry. But for real, the market should be on a support level. Okay, so three confirmations. You want to see a bullish reversal candlestick pattern. You want to see the crossing based on the stochastic oscillator below the level 20, which is the oversold level, and then you want to make sure that that's occurred on a level of support or a support zone. All right, now when all that is coming together, then you know that you're going to be having a very good entry. So therefore, whatever you want to do in the market, patience is applied. Okay, patience is applied. So I might come into the market and I'm just going to hold. See, price came to this level, I would not just buy, right? I will not just buy. Okay, but I know that that level is a support zone. Now let's look at it on 1 hour. 1 hour, right? Let's look at it on 1 hour. You see that, right? That price came to this level, okay, of support, and it's pushing back up. Now this is a level of support. What would you do as a trader? Every trader will want to do this. Okay, you should learn to do this. You get your level of support all marked, right? And then let's say price eventually closes, right? So we've marked that level, okay, and you can see it, right? You can see that very well. When a bullish candle is formed around the zone, okay, and engulfing pin bar and all that, any of the bullish candlestick formations right around this level, okay, and then you are having a crossing on what you're having a stochastic oscillator crossing below the level 20, then you know you have what a quality entry that's going to give a good profit. All right, that's going to give you what good profit. I'm switching back to the 5 minutes time frame because the strategy is all about you making use of the forward 5 minutes time frame. We already know that the price is currently around a support zone, okay, and it's trying to dip. 5 minutes time frame, 5 minutes time frame. Now, as long as there is no crossing, okay, we are not going to make a buy entry. But when the crossing comes in, okay, when the stochastic oscillator crosses, all right, a cross with a divergence, okay, yes, not a cross with contraction, all right, a cross with what? A what? An expansion. So you have expansion and contraction. Okay, the indicator gives you expansion, contraction. Currently, you're seeing that there is a contraction here. Contraction is when you see the whole the boats in the red signal line and then the percent K period, just slipping on each other. That's a contraction. Okay, now look at the chart. You see that price is trying to what? Reject that zone. So we want to see what? A bullish candle. Well, I want to see a bullish candle. I want to see a bullish candle. You should also wait. Learn to see a bullish candle, right? If it does not come on this, okay, if it does not come on this, then it's going to come on the next one. Until you see that confirmation, you should know what? Play or go in on a trade when there is no what? Double confirmation. Now, double confirmation is the quality you need to see in the market. Double confirmation. A bullish candle, reversal candle on a level of support, okay, and then you're seeing that the stochastic oscillator is crossing at the same time, then you know you have what? An entry that should give you good profit. So you should always learn to what determine your lot size before the entry comes, and then when the entry comes, you execute immediately. You've been able to understand the process. Now you need to trust the process. You need to continue to use what you've learned, okay? Always apply what you've learned. Keep doing it until it fails you, right? Now, if you don't do it, if you don't use it, if you don't apply it, then you are not going to make money. You know why? The fear of not wanting to lose money is the fear that hinders a man, a trader, okay, from making money in the market. So we know we want to see a confirmation. All right, we want to see a confirmation. Now I want to see a bullish candle, okay, rejecting this level of what? Support. And then I want to see a crossing. Now when that happens, what am I going to do? I'm going to place a trade. And then I'll wait for what the outcome will be. Now there is a bullish candle and there's going to be me placing trade now, right guys? Okay, let's see that. We need to see that. Okay, so we have that. Okay, so we have that crossing with this candle, okay, and then we have this bullish candle on this level of support, right? And we want to see price push up, okay? That's what we want to see. So I'm in the market now. Let's see what happens. The price is coming down. Sometimes it will give you the entries almost immediately. Some other time you see price going the other way around, okay? But still, it does not mean you should fret about it. That's market for you. But if you understand how to run this, okay, if you really understand how to do this, then profit will always be made because the price will not stay stuck, on a particular direction for long. All right, it wouldn't stay at a particular place for long. So, guys, let's see. We have two positions now in the market. We're holding. All right. let's see what the market is going to do. Okay, let's see what it's going to do. You want to see that, right? Let's see that. We're holding, we want to see it. The moment we make good profit, then we're going to close the trades and we'll come out of the market. All right, but we are optimistic right now that because our strategy has given us an entry, we've taken the entry, right? Because the process we've just executed. All right, now we want to see price react. We want to see it move. We want to see it move. So we're confident of this. So we're watching it to see it what move. Okay, everything we do with a live account, so you understand how it is. Okay, we don't just say things and not do it and not utilize it. So I'll be a bad teacher if I don't show you some of these things live. Okay. All right, guys. So we're waiting patiently. We want to see. It's just we have a few more minutes. We have a few more minutes right now before the new 5 minutes candle is going to come up. Okay, we have a few more minutes. We have 3 more minutes before the new candle comes up. Right? Sure. So, guys, we'll wait to see what happens here. The moment you go in, sometimes it might just continue to move in your favor immediately, right? Now, if it gives us our target profit, then we're going to take it and then come out of the market. Okay, if it does not give us the exact kind of profit we wanted to see, then we'll just exit. Right now, between $10 and all that, now we've gotten $10, so we're going to exit the trade. Okay, you see that? And boom, guys, we just made good profit right now. We just made good profit right now. That is you trusting the process, right? Let's see, how much did we make? We made some good profit, right? Yeah, you see that? We made some very good profit just right now. Okay, now I've made this profit because my target each time I go into the market is I want to make $10, okay, from the market. Now we exceeded, so I made 11.89. Okay, now I've exceeded my limits and I'm out of the market, right? And you should be there in the market because you don't have a target. Now, if you don't have a target, you don't know how much you want to make from the market. Okay, then you will just see yourself being stuck in the market, but you had the opportunity to go in and make the profit, then come out. But you want to be there because there is what? Greed. When you have greed in you, then you're going to lose whatever you've been able to make. But here at the Febs trade, what we do and what we teach you is how to always save. Okay, you have to trade conservatively. Okay, how to always save money while applying what you've learned. Okay, understand the process, use the process, utilize it, implement it, make money with the process, and also save money while using the process. So we've made our profit, right, guys? I want to believe that you now understand what we're talking about right now, because quality is very important. There was a bullish candle on the level of support, a support zone, and then there was a crossing, okay, down here. Then we got the entry. Okay, you saw that the price came back down to this level. We added another position there because we know that the price is going to go up. We've been practicing and using this strategy for quite a long time now to earn, but it's high time for you to start following us to do this. If you can do this once a day, okay, you always make your profit target daily. Do not bother yourself about wanting to stay in the market all day. All right, if you make $10 for yourself as a Nigerian, as a Ghanaian, as a South African, okay, as an African trader, please, you just have to be very grateful. All right, make that consistently all the days, and then you make money. Now, to those of you that would want to be holding, some might say, oh, why didn't you hold since you now know it's going to be like this? Like I said, it is your own responsibility to determine how long you want to stay in the market. But we've given you what? Something that is going to be paying you off, right? We've given you something that's going to be paying you off. You understanding how to use the stochastic oscillator, and then watching out for price giving you a bullish candle reversal, okay, on a level of support, a support zone, and then the next candle as it opens, you are placing your trade. Now you see how price is going to be reacting. Of course, we don't want to be in the market when all this is happening, right? We want to trade like the institutional traders, like the banks. We want to trade like the pension fund managers, insurance fund managers. We want to trade, go in like we're pumping the price and come out, all right? So we go in, we take what we can take, and then we what? We come out of the market. So we don't need to stay in the market for too long. If we get 10 opportunities a day, that will be good profit for us, right? Yeah, you see that. 10 opportunities. How much did we make right here? See that? 10 opportunities, and you see how that came in, okay? So if we had 10 opportunities for the day, if we have 10 opportunities for the day, then we'll be able to make something like this multiplied by 10. So that's good profit, right, guys? So I want to believe that you understand what I'm saying. Every strategy works. Okay, every strategy works, but what makes the strategy not to work is because you are always wanting to stay in the market more than you should be in the market. Check what you have. Do you have up to $20,000 in your account? Do you have up to $50,000 in your account? How much do you have? An average African trader has just $10 to $50, $200, right? So therefore, what you have is not enough to stay long in the market, especially when you're trading the volatility index, right? Deriv is the only broker that offers the volatility index, crash and boom, step index, jump index, and all that. So therefore, this market is not having anything to do with fundamental news, right? And so you will not get any information as to what influences the price movement up or down. So you should get ready to learn strategies that will enable you to earn. Once you go in, make your profit and come out, right? You have good funds, $1, one standard lot you go in, that will be you making more than what I made, right? You should be making like times 4 of what I made right now. It's just as simple as that, right? You just wait for it to come, you go in, take the shot. That's all. So, guys, please don't forget to click on the subscribe button, all right? Click on the subscribe button and the notification bell as well. Don't forget to like this video so the Fabs Trade family can always give you different things that you should look at. Together, you, me, Victorious Man, Fabs Trade, and every other trader out there, we can work hand in hand and make good money. So what we've been saying is, you want to stay in the market, right? To hold, then you should be losing. You see that bearish candle? Oh my God, you've lost, right? Because you're holding. But you see, we've gone in, we've taken our profit, we are out. Our strategy does not concern itself with whether the market is trending or not trending. There is always an overbought and oversold zone in every market trend. So we will always get an opportunity from the 5 minutes time frame every time the market reaches the overbought or the oversold zone. If the market crosses above 80, just like what we did here on this level below 20, then you're going to be selling, right? You sell from the top and buy from the bottom. Once again, I remain the Victorious Man, and of course, fabstrade.com should be the site where you go and get your forex education. If you want to meet me directly, the Victorious Man, you want to have me mentor you, right? Then you just go on fabstrade.com and mentorship package, a whole lot of packages you find on the site, right? Yes, if you don't come, Fabs Trade will not be able to pay me, right? Because they pay a whole lot having me around here. So we do a whole lot. We represent too many brands. Of course, yes, that's our job. All right, can you pay me? Pay, let's go. But go check up what the Fabs Trade have for you. We have a whole lot. See you guys in the next episode. I love you all. I wish you success. Always apply this strategy. This is a backup for the best trading strategy, okay? For the Volatility 100 index using the stochastic oscillator on 833 formation level. Bye, guys.